So let's go over some examples. Since everyone here is real estate investors, we wanted to focus today on real estate and the different types of real estate income that someone might be making, and to see which one of these qualify for the 20% tax-free treatment and which ones do not. Okay, so we'll start off with the first one. How many, who thinks that rental income is eligible for first 20% to be tax-free? Well, not that many people. It actually is. Rental income actually is available. Oh, I'm sorry, real estate commissions. That is eligible for the tax break. Yeah.
Yeah, so the answer is yes, actually. So one of the, and this is no joke, they came out with when they pass a law, eventually they come out with what they call regulations to explain the law in detail. The regulations are over like 200 pages just for this stuff. So, but buried in there, one of the exceptions to people qualifying for this is if you have a service-related business. So what is a service-related business? Well, accountants, we may not be able to qualify for this benefit. Lawyers may not be able to qualify.
If you have higher income.
If you have higher income, yes. And there's income thresholds as well. One of the things on there is a very broad scope consulting. Well, what is consulting? So we thought all along that real estate agents and brokers were going to fall into the service business and may not be able to take it. But actually they came out within the last 2 months and said that real estate agents and brokers can qualify to take the benefit.
Yeah. And if we have realtors in here, you guys probably know the National Association of Realtors came out and said, yeah, we believe we are not eligible for this. So it was a very welcome surprise when the details came out that said, actually, no, realtors are eligible. They're not considered a service provider. Okay. We'll take all the questions towards the end for Mike, because I don't know where Aaron is.
Yeah, so rental income. So the thing with rental income, obviously, it's kind of I'll say it's a gray area. And the reason being is it comes down to what the IRS defines as what is a business. So if you have one rental property, do you have a business? Are you in the business of a rental property? If you have 5, is that a clear-cut test? Unfortunately, there is no clear-cut answer. So on rental income, you're going to really need to work with your advisor to kind of understand the pros and cons and and whether you're comfortable taking the position that rental income qualifies. For us, there's a lot of case law going both directions. So there's case law saying that one rental property is a trade or business. There's some that say it's not. So it kind of depends on your situation. But keep in mind, obviously, with the pass-through tax break, this is going to apply if you have positive income from your business. So obviously, with rental properties, one of our goals for our clients is to get their rental income on paper at least down to 0 with depreciation and other tax strategies. So
yeah, and just so you guys know, we will go into more detail in the panel part of this in terms of, which income qualifies and which income doesn't. So we'll go through the rest of these real quick here. Interest income is actually not eligible for the 20% tax break. So that impacts those of us who are trustee investors, hard money lenders, okay? Or even if you just get interest income from the bank, that income is not eligible for the first 20% to be tax-free, okay?
Capital gains income also, unfortunately, doesn't qualify for the pass-through, the 20% tax break. Flip profit.
What do you guys think? Flip profit, yes? Yes, it is eligible. Why? Because it's active earned income, okay? Wholesale income, yes, also potentially eligible for the tax break. Property management, another active income that a lot of real estate investors get. So great, that also qualifies, 20% tax-free. Syndication, for those of you who are syndicating, you might be getting paid acquisition fees, disposition fees, managing the deal. Those are all potentially eligible for the flow-through entity or 20% tax-free income as well.